We are relying on the strong labor market and still elevated inflation in giving them license and comfort that they can keep doing this. If all of a sudden the next payroll number has a minus sign,
right,
just sort of mean reversion from the blowout when we had a few weeks ago, then all of a sudden, okay, maybe we got one left or maybe two tops. Where initial jobs claims, if they start ticking up above 200, which shockingly they've been very low.
Yeah.
But until that happens, the Fed feels like they have free rein to continue tightening, just as when inflation was low, they felt they had free rein to go to zero and print all the money in the world.
I wrote about this a little today. Do you think that infrastructure spending, government projects, is partly responsible for why things have suddenly held up so well? Or do you think it's just a weather effect? Or is it hey, the business cycle is still pretty strong?
Well, it definitely, in construction, it sort of creates that bid for more workers, but also creates a further cycling higher of wages.
Right.
There's this assumption that, we can build all this infrastructure, but where are you going to find the people to do it? Well, in order to do that, you got to pay up, which means home builders need to pay up to retain people. So it becomes a self-fulfilling prophecy, at least in that area of the labor market.
So it can keep things overall a little hotter than they would have been otherwise.
Sure. I mean, this is a lot of government spending that is being thrown on an already inflationary environment, of course.
We have a couple of different hotel CEOs have highlighted that lately. That's why I bring it up. Doug, you have kind of an interesting point here about the way inflation might be leading to labor hoarding, that it's this money illusion, this may not be the right example, but Wingstop comps, for instance, 9% versus 6% expected. I mean, all of this is nominal. In real terms, do you think companies are going to face more of a reckoning in terms of how strong demand really is?
I do, but as you noted, it's going to be more difficult to pick up than in lower inflation times. I mean, in the fourth quarter, for example, with the GDP report, real GDP was up 1% year over year. Nominal GDP was up 7.3.
Right.
I mean, it's been decades since we've seen that sort of gap. And of course, what are companies seeing? They're seeing that nominal growth flow over their doorsteps. So, to them, the economy is still pretty solid, but the unit growth is clearly slowing down.
I want to bring in Rick in just a moment. We just had a 5-year auction, Doug. But just to finish the thought, you say we have seen this before in the 70s and in the 80s.
Yes.
How does it play out? I mean, at what point, how does this battle play out when kind of nominal gives way to real?
Well, I think the slip into recession could be a really quick one when it comes about. I mean, what we're assuming right now is we might have sort of a sweet spot over the next number of months. It's difficult to time just because of I think we're still suffering reverberations from, the depth of the decline and then the strength of the rebound. That's still all reverberating through the economic numbers. I mean, and it's been well noted that, M2 contracted for the first time on record, or at least since the 1930s, first time in the modern record last year, but it grew 40% cumulatively in the 2 years preceding 2022. So are we still seeing some carryover from the enormous stimulus post-COVID? Is that still carrying over? I think so. And that could continue for a while longer and embolden these companies to hang on to the workers that they were lucky enough to get.